The S&P 500 and the Nasdaq 100, we're going to jump right into what's happening here. As we zoom in just really quick, you can see basically yesterday in the after hours, you started pushing up to 11.2, which is locally around the same highs of kind of what we had on the day of trading yesterday. And then we kind of pushed back down into roughly midnight central. Now, what happened around this time? This was heavily dependent on the Japanese market because something has started to change in their market specifically, and I have to do a little bit of a breakdown about their market and how it's different than essentially everyone else. Before we get into that, I ask you to consider doing two things: liking and subscribing. Every single day I make videos for you, so you are prepared here on the market. You know exactly what to expect. Let's get to it. So when we look here, I'm going to go over this. This is the Bank of Japan shocks global markets with a bond yield shift. Now, if you don't know, basically, and for food for thought, their inflation year over year is supposed to come out at around 3.7%, which in compared to the United States and Europe, it's really, that's awesome. Those are good numbers. There's actually some arguments that Japan would want more volatility and they would want inflation to kind of rise even more during this time, right? Just in comparison to other countries. So like if they came in like 4 to 5%, they would be okay in comparison to the United States coming in at 7%. And then for instance, Europe coming in at over 10%. They'd be okay being at those levels because they would also fall with inflation when everyone else falls. Markets typically move together. Now, when we look at what Japan's doing specifically with their interest rates, they've basically kept them at, flat for the past like 8 years. And they came out yesterday, they started changing their narrative. And it wasn't necessarily about inflation, it was more about volatility in their market because the market has slowed down per their exact words. The Bank of Japan noted in the statement that since early spring, market volatility around the world has risen, and this has significantly affected those markets in Japan. So yes, market volatility has risen, but overall buying and market activity for the positive side of the market in Japan has gone down. The functioning of bond markets has deteriorated, which is basically people investing in Japanese bonds. And if you do remember, I talked about Warren Buffett right when COVID happened or shortly after. Guess what he was buying? He was buying Japanese bonds because typically those perform the best and their economy has done the best, particularly in the terms of relative relationships among interest rates of bonds in different maturities and arbitrage relationships between spot and future markets. The central bank said if these market conditions persisted, it could have a negative impact on financial conditions, such issuance conditions for corporate bonds. So I would take this news from Bank of Japan as almost like a sign of caution, doing kind of what America should have done, right? America waited till the very last minute to start raising rates, and some say they kicked the can down the road too long. Japan's just jumping ahead of this. So actually, I want to say that even though we had downside from this, I want to say I don't think this is as serious as people think. Now, if they continue to take this hawkish stance, then it will be a cause for concern. But as long as this is just like a one-time thing and a real slow, steady thing that they're approaching with, I think you're fine. I think you have continuous upside. I still think Bank of Japan looks really good. So like the Japanese market is probably the healthiest market globally if I had to pick one specifically. So I do want to highlight that. Now, when we go back to the charts, I do want to talk about what's happening here on Nasdaq and SPY. What I will say right now is you're still clearly it's very clear in my opinion you're still in this quote-unquote downward channel. You can just see you're obviously just floating down towards the downside. Now, the big level here is about 11.44. It's that level that we've essentially been holding for the past 4 months, 3 months. I don't even have a timeline going all the way back to basically October. 3 months, give or take, beginning of October. And that's a major level, right? So this was our range, basically 11.4 all the way up to like 11.9. You'd come back down, back and forth. And so now you're in the middle of this range. But I do want to talk about, if we look at supply and demand levels, guess what? Our next demand, I just want to highlight exactly where it's at. You got a little bit of ways to go. You got some ways to go. It's all the way down here at basically 10.9 to lows of about 10.8. That's very important to realize. If we go into ES, what do we see here? Very similar charts here. So obviously still in that downtrend. It might arguably be a little bit prettier to look at here as well. If you come in here, you can see, just looks really clear in my opinion, with your demand also being right down here. Again, these charts will be on Twitter if you want to see them, and I'll have them posted on there later tonight. So you can see the demand is down here at basically 37.70 all the way down to lows of 37.50. That's my key levels I'll be watching. Now, again, I do want to highlight a few things that I mentioned yesterday. So if we look at something like the daily gaps, and I'm going to come in really quick. So everyone talks about like 5 minute and these crazy gaps they're looking at. Like the most important chart you can look at is going to be the daily time frame, because that's going to be the chart, the gaps that are going to fill 99% of the time. So if you look, you can see the daily gap here was basically at around 3081.3. Gap filled yesterday, wasn't even filled today. We go into Qs. You can actually come in here also. I think it was actually filled on Friday for SPY. And then the gap filled yesterday on Qs also. So we didn't need to continue dropping to fill the gap. And I want to say that I would have expected, if we were going to get a bounce from this gap fill, I would have expected more aggressive buying. I wanted to say that right now. If we look at volume, which we're going to do it in here in a second, I wanted to say the buying volume and the pressure from buyers has been very lackluster. And if we come back and look at something like some of these equities, like the big, big FANG stocks, the big six we mentioned, Apple, Nvidia, those, you're still getting crushed, right? And Apple is very close to those 52-week lows. They're basically 129. We can go into something a little bit more in depth. We can look at something like Tesla. That's making new 52-week lows down at 139. Go into something like Nvidia. Again, this is probably one of my favorite plays. I think it has a lot of downside potential, breaking that higher low trend here. And you look tough here, right? I do want to say you have a lot of potential, but this is one of those stocks that is holding up. We go into something like XLP and look at consumer staples here, and these are getting killed also. You have Costco getting hammered, Walmart, has a little bit of a green day here, but still getting hit pretty hard. Target locally almost at those 52-week also. So this is just cause for concern of where I'm watching this right now. But I do want to say the big gaps have been filled. So you do have a little bit of good news or a little bit of hope for getting a bounce. And when I'm looking here, I'm not just hammering short positions here right now. I want to make that really clear. I think shorting lows is probably the most dangerous and silly thing to do. I think FOMO probably is the reason about 99% of traders basically get burned out on their accounts. So that's a really big thing to be seeing right now. So that's what I'm looking at specifically here, and I want people to be focused on that. Now, going a little bit more in depth, I do want to go over to VIX and just show you what's happening here. And I'm not going to lie, I kind of love what's happening here with VIX. So personally, again, I'm in favor of getting more downside just based on where we're at. And I want to talk about where our big levels are. So our major level, we have one basically at 20 through about 18.5. And then our basically bare bones bottom is like 17 through 16.5, right? That's our little bit bottom down there. If it comes down there, it's like almost a must buy for us to start shorting or at least buying some VIX, right? So if we look here, you're actually getting some downside pressure on VIX while this is all happening. Now, the question is are you seeing some tax loss harvesting? Are you seeing actual shorts being established back on the market? Are you seeing people unwinding some option positions? That's the major question, because VIX is dropping while the market is inherently dropping also. So that's the big question here. And so I'm going to tell you right now, as VIX drops during this, it kind of makes me just feel better and better, because as VIX drops, I believe it has more room to just pop back up. That's what I was saying when he came down this area. I wanted to see consolidation, but I wouldn't have been surprised if he popped out of this, and I wouldn't have been surprised to see a drop on the market if he popped out of this. So these were all different things you had to be looking at. Now, when we go a little bit deeper into something like DXY, I think as we look at DXY, it's less and less important based on where we're at. You're not seeing a lot of movement even on the 4-hour chart for the past basically 2 or 3 days. It's been nothing but downside, and the market's been going down also. So the correlation isn't as influential as it has been before, because we're seeing different areas of the market that are affecting the dollar than typically, right? So, we're seeing what's happening in Japan, that's weakening the dollar. We're seeing what's happening in Europe, that's weakening the dollar. We're seeing what's happening with China with how they're using the yuan to back oil over there, and that's weakening, the petrodollar. So these are all things to be considering specifically right now. Going a little bit deeper, we look back at these yields, and I love looking at these yields because it gives you the best visual of what's happening here on the market. You're still holding these higher lows. You're kind of getting a little bit of consolidation. I'm going to talk about this consolidation here in a sec, but I just want to say you're still holding these higher lows here on the 10 versus 30. And again, I don't really care about the 2 and 10 and things like that. Those are cool indicators in the short term. But again, the 10 and 30 are like my favorite because it's basically timed every major drop or crash in the past 20 years, right? Big drop in 2018, timed it going back 2008, timed it, go back to .com, it timed it, right? So this is what I want to use, and this is what I want to focus on. But I want to say something. If you come to like some small time frames here, I want to make this really clear. Whenever you get this pinching action here, pinching some sideways action, typically it's followed by volatility. And I've said this before. If you're not new to the channel, then you definitely have heard this. As you look at this, I have to anticipate that we're going to see some volatility here on the yields. That's a major concern for me right now. Going into TLT, despite today being a decent day, getting a little bit of, we did drop this morning, and we should drop on TLT because I'm going to go into that here in a second. But you're still seeing downside. And even with some of the recovery we're seeing, buyers aren't buying into TLT. In fact, you're seeing more sellers step into TLT and grab more sell side positions. I think I can come into flow algo. I don't know if it's going to pull it up. If we come in here, sorry, it took a little second to find this real quick. You can see a lot of big orders coming in for downside pressure on TLT, specifically into mid and even late January. So this has me concerned, to say the least, with all this downside pressure. You can see more big orders coming in, but the biggest order of the day was to the TLT towards the downside. So these definitely have me concerned. And if people are betting on basically the downside growth of the country, and I think TLT is one of the best ways to look at overall growth and looking at, investment and what's happening and maybe the future as far as a safe bet, TLT is the best look to see. And so even with this upside, you're seeing TLT drop, that's a major concern for me. Now, I do want to highlight you're still broken out of this downtrend that we were basically formed in since basically going back to 2021 of December, since this drop really started from last year. We had the top put in, but I do want to say you're still right there. So that's worth mentioning, worth looking at, and food for thought, that's there. So that's what I'm looking at specifically right now. Now I'll go one more thing with junk bonds, and again, you're seeing those get back down and really start to fall back below. So that's what we're looking at there. So when I'm looking at the market, a few things I want to just highlight and talk about specifically. Qs. Fill the gap, not seeing heavy buy pressure. I would have expected to see more buyers, a little bit of maybe even possibly pushing some shorts to cover, but you're not seeing that. Big resistance I'm looking at on Qs right now is about 11.44. That's my pretty much top line resistance. Right now, you continue to make lower highs also and lower lows. This has to make you still be bearish. Now, if you want to try to time a bottom, grab a knife, or do whatever you want, that's gambling, and do whatever you want, but I'm not going to talk about that. I talk about what the trend is giving me and how I trade that said trend, because I try to minimize risk across the board, right? If you're looking to gamble, double your money quick, you're not really an investor, you're not really a trader, you're a gambler. That's ultimately what you are. And so I just don't mean to run anyone down. I'm not talking to anyone specifically, but I'm trying to get people to think in the way of thinking of long-term success and kind of creating a plan and strategy for yourself. And that's ultimately the goal here, what I try to do, what I try to really push out for you. So that's what I'm looking at right now. And you can even see this happening with something like SPY. You're still in the downtrend, making lower lows, making lower highs. It's just weak. You can come to like the 4 hour, and that's where you need to put a lot of your focus in before you can even start anticipating a bounce, is to looking at what's happening on the 4, the 1 day, and things like that. Because if you want to expect a bounce or trade that bounce, you want to see signs of a reversal on higher time frames to really set that up. Now, if you want to trade micro, quick little scalps, go be my guest. But this chop range here, it's not going to be your best bet. That's just me personally. That's what I'm looking at right now. Do what you got to do, but I'm just going to always tell you the truth and my opinion on it. So when I'm looking at this, I still see potential for downside. Now, again, I'm going to go through some stocks I'm liking, where they're at, and ultimately kind of how I'm looking to play some of these. Now, right now, it's worth mentioning, the only position I have still is NVIDIA. You are holding today, and this is actually the 4 hour chart, but you can actually come to the daily chart, and you can see as of right now, you're actually holding below that 162 range, and you broke down, retested multiple times, and you're staying here. You look good, but I will say, if we look back at previous, this is what happened. You held below. Guess what? You mounted back above. So if you mount back above 162.5, then you just got to close the position out. Take the money and run. It is what it is. But that's what I'm watching right there. A little bit further, looking at Target. Looking here, Target, you're flipping back below that 144 level. And again, if we go to the daily chart, you can see your local or 52-week lows are down at 137. So I still think Target could get hit. If you go a little bit further to something like the weekly, I think it becomes more apparent because you're in a bear flag. So again, Target, one of my favorite plays here. Now, I do want to give a shout out to Cajun. He's been a long-time Discord member. A lot of people are watching Caterpillar for the fake out of this kind of bull flag you have going on here. It's kind of a cup and handle. It's hard to talk about here. I don't even want to mention cup and handle, but it is what it is. Anyways, if you look at the daily, you're clearly at your supply level, right? I do want to say that you're clearly there. At supply, you're there right now. This could potentially, if it rolls over and starts to make a lower low and lower highs, I think Caterpillar could be one of the plays easily down to 200, 201. When I highlight it, I have to highlight it. I love what's going on here. Going more into banks, Citigroup, Bank of America, etc. I think you had a good opportunity today. I love these plays. I think they have potential to downside. Again, short term, 42.5, $43. Maybe even possibly testing 52-week lows. I think less loans will be taken out. less aggressive loans specifically. I think banks are just going to hurt in the short, next year, year and a half specifically. So I like Citigroup, Bank of America, Wells Fargo. Those are my favorite. Awesome opportunity today with some entry potential coming back down to previous lows and basically getting rejected. So that's what I'm looking at right now. That's what I'm doing. And there's nothing too confusing about the strategy here. Keeping it really simple, focusing on weak sectors specifically. And I'm looking at some stocks, and basically the most aggressive thing I'm looking at is going to be NVIDIA because it still is so high up there. But I think semiconductors, if we look at something like SOXX, you can just see they are kind of giving out here. And SOXX has clear downside down to 340, possibly down to 344. So a lot of downside room here on semiconductors. And that's the way that I'm looking at the market and how I'm looking to expose it and try to trade this market specifically. If you have questions, comment down below. Have a good one.